Well, welcome everyone to Women on Wealth. Today, I am excited to have with me David Thomas, who is a private risk advisor at Hub International, which is a leading insurance brokerage firm that manages almost 950,000 personal insurance policies. At Hub, David creates comprehensive personal risk management programs for successful individuals and families. So first, welcome, David. Thank you for joining me.
Thank you so much for having me.
Before we get into this, I would love to first hear you talk about your role, because we're going to talk a little bit about what we were just having a conversation on before recording this, but your job every day is to talk about the worst case scenario in everyone's lives. Is that fair to say?
Yes, and I think just to take it back to the beginning, your initial question, what is my role? I'm a personal lines producer in Hub's private client group, which is the segment of the practice that serves the affluent, high net worth individuals and families. And we'll talk a little bit about this. What does that mean, and who are we interested in protecting, or focused on protecting, interested in protecting everybody? And hopefully some of this resonates regardless of whether somebody's in our sort of target demographic. And as you said, I break it down sort of very simply and say I create bespoke, comprehensive personal risk management programs that take into consideration the insured's unique set of risks, their risk tolerance, and financial considerations. So it's not just a quote this and come back to me and give me numbers. It's really, all right, how big is your exposure? How much are you willing to and able to retain? How tolerant are you of those risks? Things that you say, I don't think X dollars for Y coverage makes sense. That's a conversation to have. And then, financial considerations. Again, it's not about ensuring everything to the nth degree. It's how do you craft a program that makes sense and ultimately protects their assets and their wealth in a way that they're comfortable with and prevents catastrophic financial loss.
No, and I love your answer, because I think there are a lot of parallels to financial advisors, where a lot of times individuals think, oh, I'm going to a financial advisor, they're just going to invest my money and they're just going to kind of leave it and they're going to charge me a fee. But to your point, there's a lot more of a comprehensive plan that's involved. And I would argue that's the same as what my firm does for clients as well. So that's why I was excited to have you on today. I know the listeners are going to learn a lot from you. And I also want to make a note. You mentioned in your role that you work with affluent clients. So for those that might be listening that don't think they have enough money to think about planning from this perspective, how would you answer that?
I think the easiest way to answer that question is to say that if you've had a degree of success in life, have accumulated homes, cars, etc., and planning is something you're doing in your financial life, then making this a priority and putting in place a comprehensive personal risk management program is of the utmost importance. You think you do not have enough. I would say conversely, families that are not uber wealthy are more exposed because they can't absorb a potential 7-figure lawsuit, which they are out there with relative frequency. Mm-hmm. So yeah, it's sort of the counterintuitive. Not I don't have enough. No, you don't have enough not to plan, and I know that's a parallel in your world as well.
No, and I know that you have a lot of personal examples, and that you're going to try and share some of them today. I would also recommend for people listening that this is for the family legacy as well, not just for you, but possibly your kids, grandchildren, et cetera, that we're gonna talk about in the episode. So thank you for addressing that. So the goal today really is to review what to expect in today's environment and the importance of having some type of plan. Can you first set the scene with proactive planning and how that helps pay off in the long run?
Yes, and what you and I've discussed this, and one of the things that's really morphed in, or an evolution in what we do in a currently very hard insurance market where premiums are continually taking double-digit increases. I think nationally it's 20% on homeowners has been a standard in 15 to 20% over the last couple of years. The goal for us with our clients, it's sort of threefold, and I'll get into some of the ways that we try to do this. But prevented, the first thing is we always want to prevent loss, most simply because it can be very costly, particularly if obviously your insurance may kick in, but if you've got, we're talking about wildfires or hurricanes where you have potentially high deductibles before you even get to coverage, just to keep coverage affordable. So that there's a significant piece of potentially direct financial loss as a result of an insurance claim or something that approaches a claim. And then the disruption to somebody's life. Obviously, successful individuals and families, you don't need to be bogged down with 6 months or a year or 2 years of hassle as a result of a loss that was preventable. So that can be very, obviously very disruptive to wealth earners, and any time away from doing what they do on the business side is time is money. So that's sort of the twofold, most basic, prevent that risk for those two reasons. And then, sort of more really important now, by preventing those loss, we want to be able to control cost. Obviously, filing claims, we counsel clients. Do you file this claim? Let's have a conversation. Not just, I see it all the time. I try to remarket somebody's program, a new prospect, and they've got 3 comprehensive glass claims and a this and a that, and there's very little dollar amount that they got, paid out, and it makes it impossible to provide a better solution, because carriers are looking at activity, not just dollars amount. Like, okay, if you're using your insurance a lot, that's a negative for a couple of reasons. One, I would argue it demonstrates that you may not understand what your insurance is really designed to do.
Sure.
And this is the way the insurance people think about it. And I, before I got into insurance, would have thought about it this way. I got insurance, use it. That's not, what our planning and what we do with clients is. You want to use insurance when not doing so would create an uncomfortable financial situation or a catastrophic financial situation. It's not about recouping small amounts. You're going to give that back to the insurance company, increased rates, over time, without question. It really is. And this is a shift in mindset a little bit as well, with the incredibly hard market.
Yeah.
That you're thinking about insurance much more from a catastrophic loss perspective. So that's the cost piece. And then dovetailing out of that, we want to, if we're able to do that, that also improves or maintains insurability. Clients that have multiple large losses being non-renewed, just very limited markets, particularly for our clientele, where it's already a subset of the market that we're typically that we are taking these clients to, with specific carriers designed to meet their needs. If you run out of 2 or 3 of those options these days, you're out of the options potentially. So it's maintaining insurability. And again, another sort of ancillary piece of this is we want house A, that's our clients, to look better than their neighbor that's house B on the same street in Malibu. Because they're looking at those things that closely now. How's your roof? Do you have brush around the house? Like, they're doing a really deep dive on the underwriting.
Okay. And David, I don't know if you have a good answer for this, but how the policies that you're taking over and the new clients that are coming to you from other carriers, how long have these old policies been in place? I mean, is there a rule of thumb as to how often people should be reevaluating these?
Yeah, I would just say from other brokers, potentially other carriers, but sometimes we'll take over a program that's got carriers that we work with.
Thank you.
No problem. So just restructuring can be a piece of it. You should be looking at this every 3 to 5 years at least. Sometimes in this current market, I've got an eye on all of my renewals, and I'm seeing, okay, what's the overall percentage increase? Is this something that we need to look at increasing a deductible, or even just in the short term, like how do we handle the current market and control cost? But I'll see programs that have been in place 20 years that are super inefficient, right? Like deductibles on a multiple multi-million-dollar home that are really low, that really don't capture savings that you could be achieving just by taking a deductible that's appropriate for the size of that property.
Got it.
Um,
Yeah.
and
Yeah.
sometimes even replacement costs on a home that have, because of the inflation factor that the carriers used over 20 years, we are much more frequently seeing homes that are underinsured, particularly coming from a mid-market carrier to what is, we call a high net worth carrier. But I've seen very significant, period programs that have been in place a long time and not sort of touched, where there can be, things
Yeah.
can be really overinsured too.
Okay. No, that's interesting. And so a point being, it needs to be looked at consistently.
It should be a dialogue. No, and I say this, and you and I've talked about it. As a personal risk advisor, we want to be a part of the financial, planning team, not just, hey, I got insurance with some person I've never met, I don't know,
Right.
I don't know what my coverages do, and people often think about their coverages, insurance as a sunk cost,
Yeah.
and it's really not, particularly affluent in the current market. It's an investment, and how do you allocate dollars in a way that is sensible for your balance sheet and protects your assets and your liabilities.
Sure. Okay. No, thank you for going through that. And I think one of the pieces of this that we wanted to address today was talking about natural disasters.
Mhm.
I think it is an eerily coincidental time for us because number one, we've all had to deal with these fire effects from Canada over the last few weeks or so, and then as of this morning, many listeners know that we have a family home up in Vermont, in Ludlow, and they went through a terrible flood last night, worse than Irene. We've been talking to friends and family up there, and I called you before this because I said, I don't even know what the impact is on our home yet, which is a little scary. So let's talk about these natural disasters and its impact.
Yeah, as we discussed previously, in the last 2 years, natural disasters have cost insurers a record $176 billion. It's sort of the talk of the industry. How do carriers maintain profitability, stay in the market? Bottom line, insurance companies, if they're not able to stay in the black, you see this in Florida, companies going out of business all the time. Even very strong carriers, AM Best, very good ratings, et cetera, strong balance sheets that have had to non-renew policies across California and Florida. And just because the size of the losses, and some of this has to do with the way the insurance market works and what you can and can't do with insurance regulators, and being able to charge a price that makes the coverage viable for the carrier to sit on. Yeah, the wildfires, you think of the deep freeze in Texas a couple of years ago, just things that we would think of as, and this is a little bit sort of cliche at this point, but the 100-year event is now, happening with frequency.
Sure.
So, and I'll give you a couple of statistics just to sort of show the magnitude of it. $1 billion weather losses in the 2010s. There was an average of 13 a year at $96 billion. In the last 5 years, 18 per year, 124 billion. The last 2 years, 20 each year, 151 billion. And then in 2022, there were 18 at 177 billion. So
Wow.
not to belabor the numbers, but they're increasing with frequency generally, and obviously the size continues to grow, and that's adjusted for dollars. So it's,
They're
yeah,
devastating numbers.
that's the problem.
Yeah.
And so you'll go with the flood. 15% of Americans have flood insurance, and
Mhm.
90% of natural disasters are have some flooding, and 20% of the claims that are filed under flood. That's just of that small, 15% of people that actually have it.
Right.
20% of those claims are in low to moderate risk floods. So we say, sort of as best practices, and I'll weave some of this in and talk about this. We always recommend flood, and not just, hey,
Yeah.
you should probably have it. It's, let's talk about what flood actually does, and different products respond a little bit differently. But
Right.
my best friend from boarding school had water come in the front door in Dallas, Texas, and wasn't a sump pump failure, so we didn't have water backup coverage. It was, hey, this is overland water,
Mm,
definitionally sort of generally definitionally flood. And
yeah.
yeah, you don't have flood, so you don't have coverage. And that
Yeah.
was a six-figure loss
Wow.
that
And
he
my
had. He
recollection
had
is Dallas is not on the water, as is Ludlow, Vermont is not either. So this is not just
yeah,
beach property.
yeah. So it's Ida a couple of years ago, but water running down the streets of New Jersey and places that are inland,
Yes.
Pennsylvania. I said my wife and I, we actually had a loss, not flood, fortunately, but in our basement because of just the drainage system, just
Yeah.
overwhelmed. So fortunately, we had coverage on that loss, but yeah, we had tornadoes, and down the road there were houses with tarps on the roof. I think there still are a couple, and that was,
Wow.
you know,
Yeah.
September, it was 2 years ago at this point.
Yeah. So the natural disasters are continuing to grow and continuing to be more costly to us. So incredibly important that we pay attention to what is included in our insurance. Fair to say.
Absolutely. And let me, because I never quite answered the question previously about risk mitigation measures,
Oh,
flood
sure.
vents. Yeah, sorry, I often
No, no, no.
fail to get to the point and end up somewhere else. But yeah, so for natural disasters, flood vents, out in California, ember resistant vents, any sort of risk mit, clearing of brush, a plan to clear brush, not just a, hey, we cut this down, but a
Yeah.
continual maintenance plan to manage the wildfire load. Those are the kinds of things when it comes to weather events, where we're not just saying to clients, hey, this is probably a good idea. It's, you need to do this.
Right.
This is why. This is what the impact could be on your insurability if you don't have X, Y, and Z.
Yeah.
And the one other one I'd be remiss if I didn't mention, the automatic water shutoff, low temperature devices, sort of tied into that too. But automatic water shutoff devices, as a best practice on every one of our proposals, we talk about it,
Yeah.
and we think it will become mandatory in the segment of the population, particularly sort of the higher value homes, where the high net worth carriers are going to say you have to have this as a prerequisite.
Yeah.
Post loss, they're often saying, okay, we didn't have this business before, but they had a water loss. If you want us to write it, they're going to have to
Mm-hmm.
install one.
Yeah.
And it's generally it's a pretty affordable solution with nice credits attached to it also. It's, even if there wasn't a credit attached, we'd be saying back to this, the sort of three pillars of, we want to prevent a loss, we want to keep your costs down by preventing that loss, and we want to maintain your insurability. So non-catastrophic, non-weather event water losses are frowned upon very heavily by insurers, because it's something that's preventable.
That could have been prevented. Yeah.
And I've just had a conversation with an underwriter this morning about a prospect who's got trees, and a tree fell on the house, and we talked about the clearing plan, and this
Mm,
family's done very responsible things, and even prior to this loss had talked to their tree care folks and said, are any of these a concern? No, they're fine.
mm,
The ground got saturated, and tree fell. But talking to the underwriter, I said, look, they were proactive about this. They took out every tree after this happened. It could have, it fell on one of their children's bedrooms. Like, it could have been
oh,
a really ugly situation. And so they've been very aggressive, and just being able to tell that story. And I'll give you a little bit of insight. Like, that's where, as a broker, that's where a lot of people don't understand that kind of stuff goes on. I
sure.
got that underwriter declined that risk. We had the conversation, and he said, I'm willing to look at it again. It's not, a lot of people think what we do is highly commodified or entirely, get me some numbers. That's not what we do at all. It's just not our model, for one thing, but it also does a disservice to the people. We need to understand, what are your risks and how do we protect you in a way that's customized to you, not just, and people think if I run it to one broker, I give it to another, I'm going to get the same thing.
Yeah.
That's not at all the case. There's a lot of nuance to it.
No, I think that's a great point. And it's nice to have someone on top of all that. I was just thinking of I was just thinking of someone I know in Florida that was cutting down coconuts from trees before the hurricane came in last year. And I've never grown up with coconuts around me, so I really didn't think of what that effect might be, but he was very
Projectiles.
proactive.
Yeah.
Yeah. So that's great.
Those are people we'd like to work with. And
Yeah.
it matters. And it's, as in your world, when you got somebody that wants to be proactive about it and understands what's at stake and how to manage risk and is bought into it, obviously that's a much better relationship.
Yeah. Okay. No, that's great. Thank you. So another topic that I think a lot of individuals don't think about on a personal level, I think it comes up a lot on a business level, maybe from I had this conversation with a nonprofit I work with this morning, but cybersecurity. So can you talk about how this piece of risk management has grown over the last recent years?
Yeah, it's from a personal perspective. You saw the uptick on the business side, particularly ransomware over the last couple of years throughout the pandemic. A ton of that, sort of some of the international conflicts that are out there, and nation states, and those kinds of attacks are hugely problematic, and there are big dollars at stake, and it can be embarrassing or worse for companies to have those events.
Yeah.
But there's a trickle down, right? And for everybody that we live our lives online, right? There so much is exposed, and so little of it, is protected in a way that would be ideal. Where there are dollars that are potentially easy, low-hanging fruit, you're going to have bad actors that go after people. And particularly, I would say, I think our numbers, more than 25% of affluent families over the last 2 years have been victims of cyber attacks. And
25%?
Yeah,
wow.
Over the last 2 years. And they take a variety of different forms.
Sure.
But 20% of family offices in the last 2 years, which are, sophisticated financial instruments.
Yeah.
And often, I mean, the decentralization there, who are the, and this is with your children, if you're, an affluent family, where's the sort of weak entry points?
Yeah.
People that may have access to financial data or other sensitive information that may not be aware of how they're using it and what sort of access that's providing. We again, back to flood, cyber, there are a bunch of these coverages that are built into our proposals. Like, clients can decline them, but we're going to have the conversation. Here's the risk. There's social engineering and ransomware and cyber, bullying, and there are good reasons to have that conversation and to think about it in a more nuanced way than people typically would.
Sure. I mean, this is something that you probably didn't have to talk about 10 years ago. Well, but it's changed. Yeah.
Probably even like for us, I know it's a much more recent focus as far as being like, it's been a product that's been offered, but now we're seeing it all the time across the personal lines landscape where I know an instance where there was a broker that had a significant errors and omissions event as a result of not offering a higher limit of cyber coverage and stuff. So it's certainly top of mind. Yeah, it is.
Okay. No, that's great. And the other area that has been around forever, but I think is also continuing to grow, is just liability in general. And can you address some of the points that you have on that too?
Absolutely. So that really is the umbrella, is the core of the financial asset protection strategy that we are kind of responsible for, if you will, when it comes to financial planning. All these other things are important, obviously, and can affect the balance sheet, but a 7-figure lawsuit or even less is really the thing that can be financially ruinous for a family.
Yeah.
So, and it used to be $1 million was sort of thought of as the entry point for everybody we work with. We're proposing $5 million, and it's not even a question, just because the cost is so minimal. Usually $200 to $300. It depends what sits under the umbrella, obviously, but $200 to $300 per million in coverage, up to $10 million. north of 10 reinsurance costs. It can be significantly more expensive, dollar per million,
Yeah.
but that's a different, that's another conversation to have. But yes, up to $10 million by your net worth all day.
Right. And can you, when you said $1 million is the entry point, can you just clarify what that $1 million represents?
Sorry, yeah, that used to be. Now we're talking about 5. So this is your personal umbrella, sits on top of your home, your autos, your boat, etc., and protects your liability out in the world. If you've got a pool and someone's at your house and gets injured, and it's the result of something that you end up being liable for, this is the piece of coverage. Your home will have an underlying liability limit, as does your auto. And when that limit gets exhausted, your umbrella kicks in on top of it. I'd say one other thing. We are the most litigious country in the world, but not even, a lawsuit that ends up settling, or say that ultimately gets thrown out. Your umbrella will cover defense costs. So think of, people say, what are the chances I'm going to get sued, or I'm going to have a big judgment against me? Well, they're not great, but the chances you're going to get sued are a little bit better. And the chances that if you do have a really bad something, an auto accident that maims or kills somebody, and there are pockets there, the attorneys are going to be able to figure out, okay, these people have some money and some assets, and they will go to, whatever lengths make sense to extract compensation for that.
And are there either asset levels or life-changing events that people need to think of to say, okay, I haven't had an umbrella policy in the past, but maybe I should start thinking of one now?
I would say even, the children of clients, when they get a renter's policy in New York City, will say get $1 million. Now, at the bare minimum, if not get more than that, because you've got dollars coming to you. And look, there are certain mechanisms that can protect wealth. We think of it as, just talking to somebody other, it's a sort of belt and suspenders approach that you see in estate planning also. This is another, your LLC should protect your home, if it's the only thing in there and the LLC is maintained correctly, and this, that, and the other thing. But if for some reason that mechanism fails, and your umbrella can, kick in and protect that asset,
right?
That's part of the thing. How do we layer protection? And that's, a piece of what the umbrella does. So as far as sort of, if you have accumulated some wealth, and or you are on track to do so, then this is a piece of protection you absolutely should have.
And this conversation came up recently. I have some friends with children that have just started driving and have been added to their insurance policy. Is that another time to consider this?
Certainly, anything that increases your exposure, additional properties, exotic cars, et cetera, worth revisiting. Your even just having children, right? And children that get online and, expose you in ways, as your life evolves, you go from being, out of, just a recent college graduate to a young professional and entertaining, and then maybe, further down the line, having large parties at your house and, big, those are things that create exposure. And you want to think about, like I said, up to 10 million in net worth, it typically makes sense by your net worth all day. North of that, the cost per million can be, although there is one carrier that has a linear pricing model, but it can be significantly more expensive. It can double from 10 to 15, the premium. So you do then, but then you think about, okay, what's this investment? What's our real risk? And how do you, that again, this is where I just had this last week. Somebody said, oh, so-and-so, it was a center of influence that I have, said, this person just needs an umbrella product. This is what they need. And I said, I can't tell you what's right. I have no idea what the level of risk is. And by the way, this person, given that this was a high limit umbrella, like if you're looking for tens of millions of dollars in umbrella, you should be having a much different conversation with a risk advisor, potentially alongside or, tied in with your wealth planning team, your financial advisor, to
Sure.
say, okay, what's the real exposure? Which of these assets are kind of, protected? Like we talking
Mm-hmm.
retirement,
Yep.
retirement is typically, protected and not open to litigation, although not always. And then those things are, again, that's part of how do we layer protection.
I think that that's a great point, and it's another good example about why this really is a comprehensive plan for everyone. Just like the financial planning conversation, right? So your retirement assets are going to be different than your taxable assets, and whether you have kids and whether you live at a beach or have a trampoline in your backyard, just things that we may not always consider. Yeah. So, okay, thank you. And so we were talking about our kids. So let's talk about the idea of leaving a legacy for the family. And you and I both have clients and know a lot of individuals that this really is the ultimate goal for them, is they want to pass this on as efficiently and as effectively as possible, minimize taxes, all of that. So can you talk a little bit about how you guys think of it?
Yeah, so we'll start with the sort of umbrella piece of this and protecting assets, sort of writ large. A large financial loss event as a result of a lawsuit is obviously going to be pretty uncomfortable and could jeopardize your ability to pass that legacy on. That's sort of clear and sort of obvious. A little less so, but something I'm very focused on, cars and art as sort of two passion asset classes, and collectibles in general, whether it's jewelry, etc. Planning around those things that are often, there are significant dollars tied up in, and tax efficient passing of those assets to next generations is something we think. It's not something we do active planning around, obviously, but how do we ensure those things correctly and even guide people towards mechanisms to lease back, putting things into trust and leasing them back so you can continue to use them during your life, and just planning generally, collection management. I'm working on a sizable collection in LA,
Mhm.
and what makes sense? How do you structure that program so that it's efficient and makes sense, ease of administration? And there are a couple of different ways for scheduling and blanketing coverages, et cetera. That's a piece of it for us, trying to help people manage those collections. And then the tail of that is, what are you doing with this at the
Yeah.
end of your life? My dad has a very large, he's a professor of geoscience for 40 years at Franklin and Marshall, and has a very large book collection, which is, it's of some value, nothing crazy, but he and I've talked about it. Like, where do you want this to go?
Yeah.
Okay, you want it to go here. Is there a budget for that? Do they want this stuff? So
Yeah.
whether it's an institution or your kids, or planning around those kinds of things, and you can be talking about, as every in art and other collectibles, cars, you're talking very, very large dollar amounts that, if not planned for efficiently and sort of
Mhm.
correctly, can end up with large liabilities that you can be that not ideal for an estate.
Yeah. And I love the example of your dad, because I think it brings up the point that this isn't just the financial aspect, but there's an emotional tie as well, that if people have these emotional ties, these conversations are even more important. So that's great.
Absolutely. Look, I want some of these things. I'd like to, Darwin first edition. There might be something there that we'd like to have as a family piece. Some of the other stuff that's of academic value, or some things that are very valuable to him sentimentally, that he would like to see go to future generations that would appreciate something that's not necessarily super valuable, but has a ton of scientific value or sentimental value to him. Getting those things into the right hands so that they're appreciated in a way that the current, owners of those, that's of significant importance.
Oh, for sure. No, that's great. Thank you. So how does one go about making a plan?
Yeah, but I somewhat jokingly make it a priority.
Yeah.
It's easy for personal P&C to be. I often say I usually say this is a piece of people's financial lives that's often poorly understood and poorly managed. So it has to be, and it just is sort of down the list of things that people focus on when they
Mhm.
think about their financial lives. Typically, it's
Yeah.
like, I'm buying a home, I need a policy, put it in place. And often, and when you're younger, I would still argue that that's a good time to do planning,
Yeah.
because it's easier eventually. But a lot of times people cobble things together and there's not a plan, there's not a program that's designed. It's just a bunch of policies. And
Kind of
that,
like the easy way out.
and it's, part of it's just inertia, right? You do
Yeah.
it, but it's a shift in mindset too. Like I said, and I go back and forth, to be fully candid on this, is how much trust building do I do where I'm like, let me show you why you should trust us and then let us do our job,
Mhm.
versus I really want you to understand as much as is possible what these coverages do. And I think it's important that people have at least a basic understanding,
Yeah. That's a fair
but
point.
it's tricky because it's a whole different language. And if
Yeah.
you don't speak the language, what's your coverage A on your home and your other structures and that's, it's tricky. You have to spend a good bit of time with people and just continue to spend
Educate.
time.
Yeah.
Yeah. And I lean that direction because I don't want to be, I never want somebody to be in a product and not really understand what it
Yeah.
does.
Yeah. Sure.
Um,
Well,
but yeah,
and I'll be candid as well, as you know, I making your point about making it a priority, I think is the most important piece of this entire discussion. And as you know, I have caught myself not making it a priority because we all have busy lives and we all have things to do. And it's so easy to shove long-term projects aside. And I've said this on this podcast about, getting a will and setting up an estate plan. And this is the exact same thing where if you haven't done these big pieces, please make it a priority and don't get caught doing what I did.
and I will say, that if you do this once and do it well and get to know a personal risk manager, even go through the process of, if you will, interviewing folks and
Sure.
understanding, but what hub is. And I always, sort of, even if it's a pretty warm introduction, I'll say, let me tell you about us and me and what this landscape looks like, and try to give people a feel for what the marketplace looks like, because a lot of times it's easy to consume without really
Yeah.
doing your due diligence, or
Sure.
it can be easy to do that. So yeah, I think it's engaging, people you trust and taking the time to try to understand it and really get comfortable with what you put in place and understand, okay, what does it do? What does it not do? And how does it meet my needs?
Right. Right. And I think ultimately, because there's so many parallels with how you're explaining your role with how my firm explains to our clients what we try to do. It's ultimately, are we getting you to where you want to be? Are we getting you to your desired outcome? So thank you for sharing that.
Let me say one thing first, because I
Yeah.
made a note, which I should have made earlier, women and wealth. I think, obviously there's a division of labor in relationships, and some people handle some things and others I always extend to the other party who's not handling this. And most times it's the husband, they're the male in the relationship, that
Sure.
is running points on this. And I always want to be open to having those conversations with the other party, for a variety of some self-serving reasons. If for some reason though that couple no longer is a couple, and the other person doesn't know you from Adam or Eve, you're out in the woods.
Yeah.
But sort of more importantly, just from a relational and a service perspective, again, the goal is not to be some guy out in the ether that wrote us some policies. It's, we have somebody that, if we have an issue, we can turn to, that we trust, that can help us solve problems, and is an advocate for us. I think I would be
Yeah.
remiss if I didn't say this. The brokerage thing about commodification, again, I would push back on that really
Mm.
strongly and
Yeah.
say, again, I'll tell you, I worked on a program recently there's a Long Island home that if the Bridgehampton property is positively elevated, we might be able to save that couple $15,000, 15% on their $100,000 spend. So,
Yeah.
and that's the question of digging in, doing the work. Is there an elevation certificate?
Yeah.
You know, and that's where the expertise is vital.
Sure.
And the other piece is when the rubber meets the road on the claim side of things.
Yeah.
This is you as a large broker, and Hub's the fifth largest broker and the largest personal lines broker. We have huge trading relationships that give us ability to negotiate with carriers, and we have relationships with people up and down the leadership stacks to advocate on. I'm not saying we can always get our way, but to advocate on behalf of clients. And that's, again, from a education, that's really hard to help somebody wrap their mind around unless they've had a really good or a really bad claim experience. And if they've had a really bad one, you can say we could do something different, but until then they have a good one with you. It's,
Sure.
those things are really tricky to sort of
Yeah.
get to resonate with people.
Okay.
So,
No, and thank you for those points, because you're right. I think there typically tends to be one. If there is a couple, there tends to be one that sort of dominates the conversation, whether to you or to me. And we try, just like you do, to engage both, because we're all busy and it's hard for everyone to spend time on it. But at the same time, God forbid something happens. This is the whole reason I came out with the podcast, because women are living longer. We've got high divorce rates in this country. They historically have not been the one to step up to be responsible for these roles. And we just, we'd like to engage them a little bit more and help them understand. So thank you for that.
Yeah,
So
some of my favorite clients are the women that run the show. And not that that's but I do. It's not lost on me when it's the female in the relationship that is driving the bus. And
I agree.
I encourage engagement from all parties, obviously. But
yeah, and again, you go back to sort of the divorce or longevity. These are not the things you want to be learning at possibly some of the worst parts of your life. So
correct.
So David, where can we learn more about you if they have questions? And
yes, I can be reached at my work email, david.thomas@hub, HUB as in boy, international.com. You can learn more about Hub at HUB as in boy, international.com. So I'm more than happy to set up a conversation, whatever. And one thing I'll say, I'm always willing to have a conversation, whether somebody thinks they're an ideal prospect for a private client, insurance, high net worth, if you will. We use that term. We use affluent because, some people think, oh, I'm not that. And again, I'll tell you another brief story. Just had a guy who was buying a $2.5 million home and turned around and said to me, I just want a home and an auto policy. He said, I'm not the client you're looking for. I sent him an email back and said, actually, I really enjoy working with people like you because you've got assets and liabilities that ought to be, you ought to consider protecting them in a different, and I would say more sophisticated manner than, what you were doing when you had a, couple $100,000 house. Like now things, and again, it's not my job to tell somebody how to manage their risk. Some people they're comfortable doing it the way they do it, obviously.
But I would concur with your offer. You have always been willing and able to chat with anyone. So I would suggest, if anyone's listening, that you do have questions, please do reach out to David. So you can be a great resource.
Thank you very much.
Yeah. Thanks for joining me.
Thank you for having me.